Although the markets are not in a real decisive uptrend, they're also illustrating they're not in a downtrend, moving sideways. The candlestick charts reveal when strong price trends are about to occur, but they also provide that same information when a trend is not occurring. However, that is still very relevant to the candlestick investor because out of the 10,000 trading entities, you're always going to be able to scan and find more trades than you can handle. So if we know the market is not moving down and we've already scanned and found trade setups that are moving positive, that's because the investor sentiment, which also includes the direction of the market to make their decisions, are not concerned about any hard selling. When the markets are waffling up and down on a daily basis, there's one underlying feature that it still allows for the identification of which way the trend is moving or whether there's been a major change of investor sentiment. In this case, the T-line, the 8 exponential moving average, acts like a natural support and resistance level of human nature, and as long as the prices continue to stay above or the trend continues to stay above the T-line, the assumption is very simple. The uptrend is in progress. Very simple statement. If you see a candlestick buy signal to close above the T-line, you're in an uptrend until you see a candlestick sell signal and a close below the T-line, or another buy signal tells you you're back up above the T-line. When you can have that simple analysis in your head, that allows for the strong charts to be identified, knowing that they're not going to be selling off because of a major sell-off in the overall market. Our recent recommendation on overstock was very simple. You could see the fry pan bottom, which creates a strong price move. You could see the setup for a J-hook pattern, with the prerequisite being a very strong price move. So when it broke out with a doji sandwich through the resistance level, it told us we should be buying because more than likely we have wave 1, wave 2, going into wave 3 as far as a J-hook pattern. And the J-hook pattern is coming after a fry pan bottom considered a classic pattern. The fry pan bottom creates wave 1 of a strong J-hook and then wave 3. AZUL was recommended because you could see how it consolidated and then you had a doji gap up. So you had basically a scoop pattern and you had a best friend signal. The best friend signal is a doji followed by a gap up in price. We call it the best friend because not only is it telling you you have a high probability that you're in an uptrend, but it's also telling you that uptrend is going to be very strong. So our recommendation was based upon a best friend signal breaking out through the handle or giving you a scoop pattern, and we know the expectation of a scoop pattern is a slingshot effect to the upside. Our recommendation on CVM was based upon very simple analysis. Notice all the dojis, indecisive trading right here at the 50-day moving average. Now, a bullish confirmation off the 50 through the T-line. It tells you the T-line is now not acting as resistance anymore, and stochastics coming up gives you an extremely high probability that the bulls are taking control. We're looking for the next target to be here, and then if it breaks through here, our next target in the same trajectory as the original trend. This is not rocket science. This is merely identifying the signals and patterns at support levels that everybody else might be watching and telling us exactly what's happening in investor sentiment at the time. This is the process that if you have 10 positions on in your portfolio, the probabilities are always in your favor that the vast majority, 7, 8, 9 positions are all probably moving in the correct direction. That'll be it. We'll see you in the chat rooms.